All right, good morning. So we had this year on Bitcoin, and that was so we've reached sell side liquidity on Bitcoin. So we're going to start with the dollar to understand what's going on in the general market scene. So on the dollar, we've gotten to our buy side liquidity target, which is this high on Tuesday, 21st of January's high. So price rallied higher into the high and also to the high of 14th January, which is also a Tuesday. All right. So what do we have here? Let's take all of this off and understand what the algorithm is trying to tell us. So we traded lower into a BC, which is this buy side inefficiency, buy side imbalance, sell side inefficiency, which is this right here is a BC. So we traded lower into the BC, and as you can see from hindsight, the candles are failing to close below the midpoint of this BC, indicating bullishness in price, which is an unwillingness of this body of price action to seek lower prices. And the previous week, we indicated this higher, meaning we're expecting higher prices for the dollar. We indicated this high here, which is our short term target, and also this high here. So we're going to readjust that to this for cleanness sake. So we have this here on the daily time frame. What other PDRA can we identify? So after price dropped lower, trading inside of this BC, price purged all of these sell side liquidity pools. All of these are sell side liquidity pools. So most of the videos that will be uploaded all through February, they won't be editing. They will just be posted as it was made to be able to keep up with the posting schedule for the year. So zooming in, price created these highs, then dropped lower, created this low here, price broke this low, and here you have this immediate rebalance. There's a little inefficiency here, which you are there. So you draw that out in time. Price used all of this. So you have this previous daily high, which is Tuesday's high of 21st January. Price traded to it and ultimately to this buy side liquidity pool. So above hold eyes, you have buy side liquidity. So you hear me repeating myself a whole lot, especially when talking about the pairing, how the algorithm pairs liquidity from sell side to buy side liquidity, because this is something that you'd want to understand and ingrain inside of your system to be able to reprogram your mindset as to how this algorithm does in fact work. So let's continue. So the close of this candle here is 109.640. The open of this candle is 109.640, which are relatively equal highs. So we draw this out in time and we indicate this as a rejection block. Now, because of how price rallied higher like this here on the dollar, I would be expecting a choppiness in price going inside of the week, because as you can see, we are currently inside of this mitigation block now. This right here is a mitigation block. So it's a it's a bearish order block which price is mitigating the sellers here that sold from this point and took partials here or took out their position here or failed to take their position here. Price drove higher back to them to push them out of this price action. Now, inversely, there are traders that trade with large size with this smart money technique in mind. So most those type of traders they trade for for the central banks, actual central banks, not I'm not talking of bookkeepers. So let's go lower to the 4 hour time frame and see if we have anything of interest there. So this is a daily BC. So we're going to indicate this as a daily buy side imbalance, sell side inefficiency. So as you can see, on Friday's trading, we after this consolidation here, doing Monday to Thursday's trading, then Friday opened here. So we opened here on Friday, drove lower, created this low here, and price dropped lower to take out to purge out this sell side liquidity pool, trading to the high of this daily BC and then rallying higher. This right here is indicative of institutional order flow being bullish. Now, when you have order flow presenting itself like this is giving you a high chance of it being a choppy price action because we've reached a buy side liquidity pool target on Sunday. That is because Sunday's trading, we opened here on Sunday. Let's look at the 1 hour to get a clear vision of what price did. So on Sunday's opening price, we opened here on Sunday and then add this quick expansion higher. So this right here is a new day opening gap. So a new week opening gap. So here you have this new week opening gap. Okay. Remember, we have buy side liquidity here. How price gets to this buy side liquidity target is really none of our business going into the first half of the of February trading. So we're going to trade intraday models while observing what price is trying to do on the higher time frame. So you have this body of price action. This right here. So we've already reached a buy side liquidity target. So we have to wait. For most of the trading, it is better to wait on Tuesday to get a feel for what Monday trading will deliver. Because currently this analysis is being done during the London session. As you can see, this time is 5:23 a.m., which is London's trading. So let's go to our asset of interest, which is the US 500, which is the indices, which is the CFD for the S&P market. So this is what we have here. So we traded to a buy side liquidity pool here, then drop lower to this low, which is Friday's opening price. Take this off. We have this relative equal lows here. Price traded to it with this massive gap. This gap drop in price is indicative of a choppy body of price action going into the week. But that's by the way. So let's take all of this off and do our top down analysis and get a feel for what the market is trying to do for the indices market. So we're going to do analysis on the S&P and the NASDAQ to get a feel and confirmation for what the market would likely do during the week. So on the daily time frame, you have this sell side liquidity pool. This sell side liquidity pool was indicated to the general group to note this because the algorithm dropped lower, created this volume imbalance here. So price traded higher with a choppiness in price, filling this volume imbalance here. So we did that, we completed that fill on Friday's trading. So after which we opened lower on Sunday's trading, trading directly to the sell side liquidity pool. So on the daily time frame, we're going to indicate all of the PD arrays we can identify. So we're going to start with this volume imbalance, which is coupled with this liquidity void, because this right here is a liquidity void. So this is what I mean. So this from the low of this candle to the high of this candle, it's a liquidity void. Then you have this volume imbalance here, which is the close of this candle and the opening of this candle. So you have them overlap together. When you have a couple of imbalances like liquidity void, fair value gap, which is the actual normal imbalances. So when you have liquidity void, volume imbalance, or fair value gaps overlapping one another, you are advised to draw all of that out in time to get a feel for what the algorithm is actually doing. Because coupling this together like this now, you can see how the narrative is being presented to the traders that are in the know. Price unwillingness to trade above the midpoint of this candle, of this imbalance here. These couple of imbalances which are overlapped together. The midpoint is these dotted lines you have here. So for the close, for you can see there is no body, no candle body closing above the midpoint, which is indicative of a bearishness in price action. This is opposite in line with what the DXY did, which is the dollar. So back to price. So the range you have currently here is from this low to this high. So you have this swing low to this swing high, which is a clear discernible dealing range. So we're going to indicate this. So we're going to use the body for it, the close of it to the open of this candle. So we have this range. And now from this range, we are currently at around a discounted point of interest. So this long week is of interest. When you have weeks like this, the algorithm sees weeks as imbalances. So when you see this type of week in price action, you quickly point it out as an imbalance. So we're going to days here is 27th of January 2025. So we're going to draw this out in time so we can take out the distraction. So here you have the consequent encroachment of 27th January week. So we're going to take this off. So move this to the right, middle. Okay. So on your on your journal, you're going to write the consequent encroachment of 27th January week, which is 5,966.3. Currently, I'm currently writing these price levels on my journal. Most of the times, I have a couple of journals, different types of journal for what I do. So I'm currently using my daily slash weekly trading technical journals. This journal has a mirror shorthand journal which I use to write out this price point. So even if I'm away from the chart and I just need to have a quick peep to see what price is doing. So if we've reached around this point of interest, these are pools of liquidity. These are areas I would want to participate in. And remember, we're in a new month. So this day, the 3rd of February, this is the first day, this is the first trading day of the new month. So what PDR rate can we identify here within this range? So we can see this imbalance here, which is this BC. So you have this BC here on a discounted PDRA, which is a discounted PDRA. So here you indicate this as a daily BC. Now we drop lower to the 4 hour to get a clear vision of price. So on the 4 hour, this is what we have here. On Friday, we made this low here. We closed at the close here on Friday was 6,6035.6. That was the close, and the opening here was 5,941, which is about a drop of 94 points. So price dropped lower about 94 points. So here on the daily time frame, it has been established that price is in fact has in fact come for this sell liquidity target. Now you do not want to be in haste to draw conclusion if this right here is the low, if this low won't be violated, because as you can see, you have this relative equal lows here. This right here, the algorithm sees this as relative equal lows, which, I remember, what do you have below relative equal lows? You have sell stops, which are sell side liquidity, which is resting as sell side, right? So this is of interest, this sell side liquidity pool. So right here, you have this new week, new week opening gap. Now let's see if this is overlapping with other new week opening gaps. You can just easily plot this here in your graph to see. Now you have clusters of new week opening gaps inside of here. So I'd want to wait for Tuesday's trading to see what Tuesday offers us. Preferably, I would expect us to draw to this liquidity pool, this relative equal lows, because you have multiple new week opening gaps overlapping with each other, which is these three new week opening gaps. When you have when you have a minimum of three new week opening gaps overlapping within and around one another, there's a very likelihood that price will draw towards that target. This is why when we opened here after Friday's trading on Sunday, price dropped lower quickly, because you have all of these overlapping new week opening gaps and also this new week opening gap here. This is a new week opening gap slash new day opening gap by kryptonite. Yeah, kryptonite. So I've been using this for about a year now. So it's easier to plot your new week opening gaps to get a feel and understand what price is doing. Now, as you can see, here it's a new week opening gap. So this is an overlapping new week opening gap here. So it traded to a new week opening gap on Friday's trading, made the high of the week on a Friday, and then dropped lower and created another new week opening gap. Now, personally, from personal studies, when I see a new week opening gap being as extreme like as this, having about almost 100 points of untraded imbalance in price, which is this liquidity void. A new week opening gap is also a liquidity void because it is void of trading. There is no trading inside of that liquidity pool. So we're going to look at the 1 hour. So on the 1 hour, we're going to indicate the Sunday's opening price. So we indicated this Sunday's open and this midpoint of the new week opening gap. Now we want to watch how New York trades. New York trading doing this Monday's trading. If New York will be interested in the midpoint of this new week opening gap before coming lower. So because currently we are currently around a discounted PDR, we are currently below this midpoint, which is 5964.5. So I want to see price trade to at least this 596.64.5 from now till the afternoon session. I would want to see price trade above two and above this liquidity, this imbalance here. Sorry, this equilibrium point, which also coincides with this consequent encroachment of 27 January week we got from the daily time frame. So that is it. Let's take a quick look at the US 100, which is the CFD for the NASDAQ. So for the NASDAQ, we're going to start. Let's take a quick look at the weekly and see what the weekly has been doing. So for the weekly, we have these relative colors here. We're going to indicate this right here, relative colors. After price took out this buy side liquidity here, rejecting from this rejection candle, which is this ice candle close. This candle's open, sorry, which is the highest candle body here for this price. So you draw this out in time. This right here is a rejection candle. So price rejected from it on Monday's trading. That is the previous week. Then the last week dropped lower, creating this type of imbalance. Now for the previous weekly candle, you have this long wick. Remember what we indicated earlier. Wicks are imbalance. The algorithm sees wicks as imbalances. So consequent encroachment of weekly week. Take all of this off. So on the 4 hour time frame, this is what we currently have. So January add this range band price action. Price dropped lower to this relative close, rallied higher to this high, which is a relative equal highs. These are relative equal highs. So that's sell side liquidity resting below this relative close. Price dropped lower. We pushed sell side liquidity, left this down close candle, which is a bullish order block. You would want to spend much of your time here in these higher time frames, most of the time when doing your analysis, because this is where the narrative is gotten from. When you've understood how the narrative is being formed from this higher time frame, trading the lower time frames or intraday models will be extremely easy and beneficial for your development. So now we have this lows here, which coincides with this low, which are relatively equal lows as indicated earlier. So we want to see how price trades inside of this new week opening gap. We opened here on Sunday after closing on we closed here on Friday, opened here on Sunday. So right here you have a this new week opening gap. So I'm going to employ this. So as stated earlier, we are watching to see what the New York AM and PM session does deliver. The likelihood of the ES getting to the midpoint of the new week opening gap is higher than the NASDAQ getting to the midpoint of the new week opening gap. But that is not the narrative we are looking for. We are trying to see if the premium PDRAs here are acting as a resistant PDRA, as acting as resistance, resisting price from going higher. If that becomes the point, we are in fact seeking lower prices going into this week and the second week of February, so at least the third week of February. So that is that about that. I hope you got something from this video. I'll talk to you tomorrow. So we'll be making videos daily. So have a nice day and good luck, good trading.